Hi there, welcome to kneppyinvests and welcome to March 18, 2025. As I look at how the market has performed today, for the first time for about a few hours, I'm a little bit disappointed. And we'll see why in a minute or so when we have a look at how the XJO, XAO, and Ortec have performed during the start of trading. Yeah, disappointing day. Even though we're up, it's been a disappointing day. Okay, so the agenda for today's video, identical to most other videos. No interesting articles or anything like that for you today. However, I've done a standalone video on a CEO magazine or Chief Executive magazine article that was online in regards to business confidence in the United States. And also I included in that video, Delta Airlines issued a trading update last week. I had a look at it last night and really interesting. So I've done a standalone video, not on each of those articles, but I've just lumped them together. So look out for that in a few hours after I've after I have released, that's the word, released this video to you for watching. Anyway, so after we've gone through the ASX today, and we'll do the usual stuff in that, we'll have a look at the top 5 stocks of the day. Interesting enough, a company that would have been stock of the day because of a really interesting announcement last night, they went into trading halt this morning. So there's no trading. But I've decided to put that company at number 2 because another company released half-year results. And those half-year results were actually quite good. A coal company. And also, what did Trump say today? He said something about how we got to increase using beautiful, clean coal or something like that, something ridiculous. And we've got 3 other companies in the top 5. And then after I've gone through the top 5 stocks, we'll have a look at some of your comments and questions. Okay, so let's start the day looking at the ASX. What has happened today? And as I mentioned, disappointed. The whole reason I'm disappointed is because at one point in the morning, just after trading began, the XJO was up maybe 0.6 or even 0.7%. Tech had done even better. And since then, we've just been falling. This was around about 11 a.m. And in fact, at one point today, the XJO and the XAO and the XTX were all in the negative. So at least the markets or the indices have leveled off since then, but not as good of a day as we might have expected. And maybe that's to do with American futures. I don't know. Wouldn't be surprised to see a down day in the United States tonight, but we just don't know because I still think the bounce is at play in the American and Australian indices, but this bounce is starting to look a little bit weaker than what I thought might happen. I thought we'd have quite a few really good days, but in the United States, yeah, a couple of good days in a row, but a little bit disappointing at this point in time. Now, if we keep on going down, a really good day for utilities, energy, and real estate, and a negative day for discretionary and financials. So that's probably one of the reasons why our market has been disappointing is because the bigger companies in the ASX are banks. And that's one of the reasons I don't like the ASX is because we are too concentrated in financials, particularly banks. And I don't think that's a good thing. That is not a good thing. IT hasn't had a good day either, down 0.03%. Small caps had a really good day, up 0.83%. Not sure what's happening there. Maybe that's a good sign. Maybe there's a bit of rotation out of the crappy big companies, defensive big companies, into the more risky assets like small caps. We saw that not play out. We saw the reverse of that play out the last few weeks where small caps were really suffering. And I thought there was rotation from small caps into defensive companies. And maybe we're starting to see that reverse. I don't know. We'll have to see if there's more evidence of that over the next few days. Gold's had another good day. What can you say about gold? Look at the month. Look at gold, up 5.97% for the month. And most of the other indices are down by more than 6%. Including tech down 15.59%. So again, gold can be a safe haven in turbulent times, and we're seeing that prove right now. In these turbulent times, gold is a great place to park your money. Year to date, gold up 26.7%. 26.7%. And yeah, so there's nothing else to see there. I'll have a quick look at the ASX 20. The worst performing indice here, actually down 0.1%. That's probably because of the banks. And we can just verify that by looking at this. By the way, 11 companies up, 9 down. That's another indication. Well, it could be two indications. It could be the bigger companies in the ASX 20 are down, or it could be those companies that are down bigger than those companies are up. So let's have a look by market cap. And in fact, the two biggest companies on the ASX are down, CBA and BHP. Westpac's had a good day, up 1.14%, but then NAB's down 1.64%. ANZ's up 0. What's happening? I have no idea. No idea. Macquarie Group's down 2.25%. It's all over the place, isn't it? Worst performing companies in the ASX 20 are Macquarie Group, and the best performing company in the ASX 20 is QB Insurance, followed by Woolworths. Although I did hear that there was a positive, some sort of not re-rating. I think this was in Capital Brief. Let's have a look. Yeah, Woolworths shares climb as Macquarie sees buying opportunity. I don't, but yeah, just buy Woolworths because Macquarie thinks it's buying opportunity. Don't think for yourself. Yeah, I'm having a bit of a go at people who just buy and sell based off broker recommendations. I think that's, in my opinion, that's just insanity. Okay, so let's have a look at the best and worst ASX companies today. At top gainers, first of all, percentage change. Quite a few of these companies are up fairly big on fairly low turnover, and most of these companies are fairly small. We're talking about markups significantly lower than $100 million. I'm just looking for one interesting company among this list, and I can't really find anything in this list. So let's have a look at the top gainers by market cap. We have New Hope. In fact, up 8.78%. That is a company that would have been top stock of the day if I did it today. They did release a half-year results, so I'll talk about that company. And I had a look at the half-year results, and my first thoughts were, oh, it's not bad. I thought coal companies would have a pretty bad half-year or full year, but looks pretty good. Austal, there was, I think, some company increasing the stake in Austal, and I'm pretty sure that's why it's up 7.44%. I'm pretty sure I read that in, yeah, there we go. Austal shares surge as Hanwha Group buys up 9.9% holding. So they're not increasing, based off this article, they're not increasing the holding. They've bought 9.9% of the company. And that's probably why the share price of Austal is up. Let's have a look at the chart for Austal. They just did a capital raising, and it looks like that was an ideal time to buy because I think the share price of Austal has rebounded after that. Let's confirm. Yeah, sort of. Yeah, that was a good time to buy at about 350. Oh, yeah, definitely. Good. Could have bought 350 and it's gone up. What's that? 350. It's gone up 65. It's gone up almost 20% since then. Is that right? 20%? Yeah, looks like it. Anyway, that's the way she blows. Clarity, not sure why Clarity's up 11.22%. I didn't see anything from the company itself. So I'd say some of this is just noise. Orthocell, they're getting closer and closer to FDA approval. Although, no, wait there. They did get approval for selling something in, regulatory approval to commence striate sales in Singapore. So that's why the share price is up for Orthocell. And let's have a look chart for this one. By the way, I'm studying a new indice called MAPD, which is the percentage distance from the moving average. So I am starting this right now. That's on the bottom of my chart here, MAPD. And yeah, this is, I saw someone else using this, and I thought it would be a good time to study. And the reason why it might be interesting is because if you have a look at the XJO, it's fallen to negative about 6%, which doesn't happen all that often. And that was an indication that maybe we're due for a bounce. Although today's one-day candlestick for the XJO looks really weak. Anyway, back on to Orthocell. Yeah, nice little bounce here for Orthocell. Yeah, so this could have been a nice little buy the dip situation for Orthocell. However, if we do see continual weakness in the market, wouldn't be surprised to see this slip away or go sideways. Anyway, anything else here? No, and no. Let's move on to the top losers. By percentage change, we have a company called Sensen Networks, a company I do like, but I was thinking of buying this company, but I just wanted to wait and just see how they perform. And the share price has really collapsed lately. Share price is down to historical lows. Ooh, this could be a nice time to buy. Might be. If I was a little bit more optimistic about the market, share price has really dropped significantly. Share price was as high as 6.5 cents. Now it's 1.9 cents. The reason I could be interested in this company is because they have been operating cash flow positive. I don't think they were in the last quarter. I think they were just shy of being operating cash flow positive. So they're not quite there yet. Oh, no, they were. No, they weren't. They were, but they weren't. They were operating cash flow positive by 1.253 million, but they did receive $2.262 million of grants and tax incentives. So by my definitions, they were not operating cash flow positive at all. I think they were the last quarter, however. So the company is close, and they had been making quite a few deals in Canadian cities like Montreal, Toronto, and I think there was one other one. But we haven't seen any other deals lately. So maybe that's why the share price has been falling. But I think this could be a case where the market is overreacting. I don't know. And the other thing is the share price is 50% from the moving average. Insanity. Which moving average is that, by the way? I'm trying to remember which one I used. Yeah, 50. What if I could use a different one? I don't know. I haven't thought about it yet. Anyway, back to the top losers. Really shouldn't have talked about Sensen, but it's interesting. Fairly low turnover. It is liquidity traded. So that means the share price could increase 300% in the next few weeks just off someone getting interested in the company. Let's have a look at top losers by market. Fairly boring day. Both in top losers and top gainers by percentage change. Gold Road is in my top 5. They did release something today. I had a quick look and I went, ooh, not good. Share price down 5%. And there's nothing else here that's grabbing my nether regions. And what I mean by that is it's getting me interested or intrigued. Maybe that's a better way to put it. Clearwealth. I don't think Clearwealth did release anything today, but why is that ticker code? They did. There we go. Yeah. So by the way, I did have a look at the announcements just before I started recording, and that's why Clearview popped up. Clearview announces pricing for wholesale subordinate notes. I'm not sure that would trigger my interest at all. So we can move on. Okay, let's move our attention to the top 5 stocks for the day. Starting now, for full disclosure purposes, I do own this company, Austco Healthcare. This company is in my super, which means I am not trading it. So I have transitioned to an investing and trading strategy where every company in my super I don't trade. So I'm just going to leave that as long as possible. So we have high quality companies in that. So it's mostly high quality companies, but also I've got some small caps, some profitable small caps that I think have potential to grow. And I don't have any value companies in that portfolio just yet, or the super, but that is definitely something that I might think about. I do still like looking for value plays. But anyway, Austco Healthcare is a company within that portfolio. They secured their largest SMA contract in company history. SMA is Service and Maintenance Agreement. It's not a big contract, but because it's only like $1 million over a 6-year period. So it's a software and maintenance agreement spanning 5 years with West Park Hospital, one of the largest, or the company's largest customers. So I'd like to see more clients here. More. It's good to have a lot of clients. Diversified clients. You don't want to be too concentrated because that can cause issues. A great example of that would be Appendix. Another great example of that is a company that's now listed on the ASX. This was a company who ran the Telstra stores. I forget what company it was called. They ran the Telstra stores. That's their only thing they were doing, and then Telstra said, "Gee, you're really profitable. I think we're going to change our contract," and that is a problem. So you do want a diversified client base. So reasons I have bought into Austco, might as well talk about this now since I do own it. This could be more of a standalone video, but I'll just do it really quickly now. So company is profitable. In fact, let's have a look at the most recent half-year results. There we go. We'll just have a look at the most recent half-year results. Company's not big. So if you have a look at the revenue, so revenue up from 22.8 million to 36.9 million. They were also profitable by, where is it? We'll call it 2.9 million. I'm going to disregard exchange rates. That pushed their income or profit up to 4.2 million. So profit increased from 1.2 million up to 2.9 million. Nice increase in assets as well, or equity, from 44.4 million to 49.1 million. We want to see equity increasing through time. And also the cash flow, pretty nice cash flow as well, 2.2 million. So it's a fairly small company, but they are profitable, they are generating cash flow, that sort of thing. So no issues with this company at all. And of course, the company's not that big. Last time I looked, it was like 40 million. No, that's wrong, 109 million. 109 million. Why did I think it was 40 million? I've held it for a while, and again, I haven't looked at this company for a long time. So companies in my super, I don't look at until I see something I don't like or do like, and then I have a closer look. So I've held this company for a while. Oh, not a lot. Actually, it's not that long. September. For some reason, I thought this company was much smaller than it is, but that's okay. Anyway, so interesting company, and share price up 4.21% today on a nice little contract. Biggest SMA contract in company history. Now on to company coming in at number 4. We have a very small company here. I have no idea how big this company is. It's called Dorvasi. Now, you notice the share price is 0.9 cents. So straight away, this is a no-go for me, just because of where the share price is. Now, if the share price went up to 1.5 cents, I could find time to take a closer look at this company. Fairly small. Market cap is, I would say, like 10 million. 6.58 million. There you go. It's a small company. In the past year, the share price has decreased 52.63%. So it's not about, and by the way, the company does have receipts and revenue, but they're fairly small. But the reason I'm interested in this company, and for the first time ever, is because of an announcement they released in regards to ACL injuries, which is anterior cruciate ligaments, anterior cruciate ligament injuries. If you do follow sports at all, you know ACL injuries are, they can be, it can put a sports person out for 1 year. So as soon as you hear ACL injury, you know there's a chance that that person will be out for 1 year. So they are one of the worst. They're sort of like a knee injury, particularly if in any sports you're like suddenly stopping and shifting directions really suddenly. So basketball is probably a lot of ACL injuries in basketball. Netball would be a really bad one. Netball ACL injuries. And the reason I know this, my sister was, pretty sure she was a netball rep player, and she had really bad ACL. She had really bad knee injuries or knee stuff. ACL injuries common in netball? I'd say yes. In fact, 25% of major injuries reported from netball involve rupture of the ACL. The other thing I learned is, I'm not sure when this happened, is ACLs tend to be a more problem for women athletes than men athletes. So with women's sports becoming more and more prevalent and more popular, this could be an issue moving forward. Well, it's already is an issue just because it happens a lot with men athletes as well. Anyway, so this company released an announcement. Where is it? So Dorvasi launches 3D motion analysis tests to reduce ACL injuries. And I was like, ooh, that sounds really, really interesting. I did actually open it up and I had a read of it, went over my head. In fact, ACL injuries sideline thousands of athletes annually, with female athletes facing up to 8 times the risk of the male counterparts. 8 times. They do have some evidence for this. They do have a link from Yale Medicine. I was going to say I'm skeptical of that particular 8 times more, but it's from Yale Medicine. Anyway, Dorvasi has launched a first of its kind commercially available knee assessment tool using its FDA-cleared wearable sensor technology. Now, I knew nothing about this company before today, so I did have a quick look at their About section, and they're into wearables. That's what they're selling. So wearables. So focus on developing innovative motion analysis device technologies for use in clinical applications, elite sports, and occupational health and safety. Dorvasi believes its wearable sensor technology enables, for the first time, many aspects of detailed human movement. Not a lot of revenue so far. I think receipts of $300,000 or something like that. Even though they've dropped a few interesting companies here. Crown Resorts, Caterpillar US, Boeing, Monash Health, Coles, Woolworths. That's interesting. Well, that's not to do with this. That's something else, it looks like. Anyway, so let's have a look at the chart for Dorvasi. DVL. Is this the turnaround? And I think the answer to that is no. Not really interested in this chart at all. Okay, so that's Dorvasi, DVL, company I've never looked at before. Today is the first time for everything. Coming number 3, we have Gold Road. They did release some sort of, I think it was a production update or something like that. Share price down 5.3%. Yeah, there we go. March 2025 quarter production update. Now, I don't follow this company too closely. Gold's had a good day. Unfortunately, Gold Road's down, so that's not what you want to see. I had a quick look at this and I went, gee, why is their gold production going to be significantly down from the previous quarter? Yeah, so gold production for the quarter on a 100% basis is anticipated to be between 70,000 and 73,000 ounces of gold. In the last quarter, it was 91,631 ounces. So straight away I went, ooh, what's happening here? And they do mention in the next bullet point down, production is anticipated to be below plan due to maintenance on the primary crusher and the failure of 2 conveyor belts. The JV has investigated the cause of these issues and has developed recovery plans. I can definitely understand why the market doesn't like this. But 2025 annual production is unchanged, so they're really going to ramp up production in the next few quarters. That's if they fix everything wrong. The market doesn't like uncertainty, and this increases the uncertainty when it comes to Gold Road resources. There is a chance that maybe they will have to eventually downgrade 2025 guidance, and I would say, yeah, the market is selling based off that. So let's have a look at the chart for Gold Road. But in saying all that, this could be market overreacting, or maybe that's not, but it could be. Market could be overreacting. And if you have a look at the chart, yeah, the share price has been on a bit of a tear, which is understandable because it's a gold company and gold's been on a tear. And what else can you say about this particular chart? Okay, coming in number 2, we have Findi. Findi would have been the stock of the day, and I probably would have done a standalone video on Findi. They went into trading hold the other day. It was a really positive sounding trading hold. I've never seen this sort of trading hold before. They mentioned here, the trading hold is requested pending announcement by the company to the market in relation to the positive impact of the Reserve Bank of India's increase in interchange rates. The very fact they said positive impact, I think, was intentional, because if they just said to the market in relation to the impact of the Reserve Bank of India's increase in interchange rates, there might have been some people panicking. Even though it says increase in interchange rates, there might have been some people panicking, thinking this is a bad announcement. But the very fact they said positive impact, I think, definitely may have eased some people's fears. So they came out of the trading halt last night. Increase in ATM interchange fees. They also gave us some numbers, how beneficial this will be to Findi. And I thought, whoa, the share price is absolutely going to soar when it goes back to trading this morning. So 4-year impact in 2026 and 2027 expected to be in excess of 5.5 million and $10 million, respectively, for Findi's white label ATM network. So that's pretty significant when it comes to profit. Profit increasing $5 million in 2026, $10 million in 2027. So if you just did a net DCF, you'd have to significantly increase the valuation of this company. So I thought, keep an eye on Findi. Share price might absolutely take off. I wouldn't have been surprised if the share price increased 30% on open this morning. But then lo and behold, what did the company do? They went to another training halt at 9:13 a.m. and they decided to do a capital raising. They decided to do a capital raising. Yep. I wonder if this was planned. I have no idea. Capital raising. It's really interesting because I would be a little bit critical of management. They could have done the capital raising in another 5 days, and if the share price had increased 30%, they would have got a significantly higher price for that capital raising. So I will be a little bit critical of Findi right now because of that. But maybe they already planned this capital raising before this increase in ATM interchange fees. I don't think it was that long ago they did another capital raising. Am I wrong? I thought it was not that long ago they did another capital raising. Anyway, and that could have been because of acquisitions. Okay, so let's have a look at the chart for Findi. The share price more than likely will go up, but it depends on the capital raising. But just because that announcement was so positive, that could, yeah, I don't know. That could really, I think whenever the shares in Findi reopen or open up back to trading, it's going to be interesting to see where the share price settles. Anyway, let's have a little chart for Findi. And the chart doesn't look that great. A beautiful chart for a while. And then we had that really big down day, and that was a trend killer. That day was, what day was that? The 29th of November. Share price on that day dropped 23.74%. And I'm getting to thinking that these sort of days are trend killers and you just get out. If you're a trading company, just get out. So I'm seeing this more and more often where you see share price drop like this with that sort of candlestick. And that is a signal to get out of the trade. And we haven't seen really anything much happen with Findi after that. Share price has been quite volatile. We've seen a couple of moving average crossovers, in fact 3. I wouldn't be surprised to see another one. So we just had the most recent crossover was a negative one. So we're probably going to see another positive one. But at this point in time, the trend in Findi has changed. There's no trend at this point in time. And that's because of that one negative day. And that would have been the AGM. So it looks like, no, it was results. They released results. Yeah, released results in November. So obviously the market didn't like those results. So that's Findi. Coming in number 2, I sort of wish they were in trading today because I'm pretty sure the share price would have been up significantly. Now onto the stock of the day, which is New Hope Corporation. In fact, if you have a look at we're in a closing auction. If you have a look at the half-year presentation, I think it was that one. At the top, I'm just going to open up. Yeah, it must have been that one. I'm going to open up the media release because this is taking ages. Maybe it was just a media release I looked at. And at the top right, they've got NHG New Hope Group. So should we call this company New Hope Corporation or New Hope Group? Because down here, they call themselves New Hope Corporation. So what is it? New Hope Group or New Hope Corporation? I don't know. Maybe they were once called New Hope Group. Yeah, here we go. Figures reflect a New Hope Group equity interest basis. So I'm definitely missing something when it comes to this company. Anyway, so I did not have a look at the presentation. So I'll have a look at the presentation later today after I finish recording. I had a look at the media release, and I just want to have a look at the highlights. It's half-year results. I love half-year results or full-year results. And the first thing I took away from New Hope was, wow, these are pretty nice increases. Did the market expect this? And obviously not, because the share price is up almost 10%. So coal production increased 32.9%. Cash costs down at 23.5%. Underlying EBITDA from 425 million to 517 million. Profit from 251 to 340. Cash flow from operating from 130 million to 317 million. And cash steady. Increased their equity interest in Malabar Resources a fully franked dividend of 19 cents, up from 17 cents. And they've also announced a non-market share buyback. So obviously they believe that the valuation of this company is attractive. That's the only reason you do a share buyback, because you think the valuation of a company is low or, cheap. Anyway, so a pretty good, just based off this, pretty good results from New Hope Corp. I did not have a look to whether these results beat expectations. I would assume yes. Now, there was an article in here in Capital Brief. I think there was, New Hope shares climb as first half profit soars. Sometimes in these articles in Capital Brief, they do have quotes from analysis saying, results were better than expected. So let's have a look to see if that is right. Oh no, they just got a quote from Robert Milner, the chairman, believing the buyback will benefit all shareholders via reduction in the number of shares. Well, that's only beneficial if the company's valuation is cheap. If the company is really expensive, that is actually not beneficial to shareholders. It doesn't matter the reduction in shares. It's not beneficial. It's not a capital allocating savvy idea, or whatever you call it. Anyway, thereby supporting the company's return on equity, earnings per share, and dividend per share. Greatly, but it's all to do with the valuation of the company. Just because you're doing a share buyback doesn't mean it's good for shareholders. You want to add value to shareholders, and the best way to add value is to buy back your shares when they're cheap, not when they're expensive. Anyway, so let's have a look at the chart for New Hope. Chart has been, I wouldn't say disappointing, but hasn't been much to write home about when it comes to New Hope shares chart. In fact, the share price did move into a downtrend. It broke through $4 not that long ago. We've seen a nice little rally. This is not the sort of chart I would be interested in, just because for some reason, market didn't like New Hope at all. Yet their results were quite good. So this could be the bottom. 370 could be the bottom. Oh, I reckon $4 could be a nice little play for New Hope on the idea that we might continue to see a bounce. We'll go with that. Share price looks like it might close right on $4, which is the support level or resistance, depending on what you look at. Anyway, so that's New Hope. I'll have a look at their presentation tonight. Could be a nice sneaky trade, a low risk trade. Okay, on to some of your comments. Scott says he loves those deep dives. I don't like how Zoom recorded that video. Now, they've changed something in Zoom, so I can't record it how I used to record these. So I do PowerPoint presentations, and I used to able to do a virtual background, and I couldn't do it. I don't know what they've done. Anyway, so I'll try to do more of these deep dives. I do like to do them because I do learn more about companies as well. And he also mentions nail on the head debt-fueled Ponzi scheme. At best, a trade pony. Yep, I agree with that. Telstra at best is a trade pony. I would never own Telstra for the long term. And we just saw yesterday with the operating cash flow history, it's actually going down through time, which is not the sort of company you want to own for the long term. Dev Shaw says, would you please cover Paladin Energy since it's dropped almost 50%? Price never recovered despite all positive reviews by leading analysis. Let's do this one. This will be my only comment for the day. Well, not true because I've responded to Scott. Paladin. So what does Paladin mine? Uranium. Let's have a look at uranium prices. This is via the spot physical uranium. The reason I look at this is because my usual uranium is very spotty chart. It's not a good looking chart. So this is spot physical uranium. And what do you see? Uranium's in a downtrend. Uranium prices are falling and falling and falling and falling. In fact, we'll have a look at, I'm wondering if uranium's in trading economics. Sometimes you do have good charts in trading economics. Here we go. Yeah, here's a uranium chart. It's at $63.80 US dollars a pound. And you can just see here, it's in a downtrend. It's in a downtrend. So that's your answer. That is your answer. Paladin Energy is a uranium company. Uranium prices are dropping. So it doesn't matter what analysis I've talked about when it comes to Paladin Energy. All that matters is, well, I shouldn't say all that matters, But the main correlation between Paladin Energy share price and, yeah, the main correlation with Paladin Energy share price is uranium prices. And that is a problem with mining companies, that a lot of times it doesn't really ultimately depend on management, although in some cases it does. I'm thinking of Northern Star. If you have a look at Northern Star, they made some significant, great decisions back in 2012 in regards to some acquisitions, and that made that company. But overall, or generally, the most important thing for a mining company is the underlying price of the commodity they're mining. And for Paladin, it's uranium. And what's happening to uranium? It's dropping. So it doesn't matter if they're getting all these positive reviews from leading analysis. Uranium prices are dropping, and that's all that matters right now. So some of these analysis might be talking about really positive tailwinds behind uranium for the next 5 to 10 years, but we're not seeing that right now. And that is a main driving force for Paladin. So let's have a look. In fact, what I might do here is I'll have a look at Paladin. I'll get rid of the moving averages. And then what I'll do is I'll overlay uranium. Which one? Price scale. Yep. And in fact, you can see it right here. You can see it right here. You can see how there's an almost perfect correlation between Paladin Energy and the price of uranium. Well, there's a great correlation here, really good correlation between the two. So when it comes to Paladin, it's all about uranium prices. And that is the main driving force of Paladin Energy share price. That's why the share price is in a downtrend right now. Okay, so that's all I have for this particular video on the ASX today. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.